Welcome to the Mortgage and Mindset in Minutes podcast, and I'm your host, Tiffany Rose, where you'll get a little on mortgage and a lot on mindset. Okay, so Ken, I am so excited that you're here because these are such hot topics that we're going to talk about in the arena of credit. So I'm just going to officially introduce you, if you don't mind. Is that okay?
That'd be perfect.
Okay, you can add on anything I left off because you're super important and definitely in my sphere of influence in this community. And I just love that you agreed to do this. So, everybody, we're with Ken Strey at Scorewell Inc., and he is the owner of this business since 2015, but he has many, many years of experience in the credit counseling arena. And there's a lot of clients that I come across over the years that they have questions and they try to reinvent the wheel and pay down their credit cards and transfer balances and do all these things. And they don't want me to run credit until they try to mastermind it themselves. And what's a charge off? And there's all these kind of questions that my clients ask me. So Ken has been in the business a long time, super nice guy. Everybody loves you in the business. He's a trusted partner in the credit counseling and credit repair arena, which is why I wanted to bring him on, just have him, tell us some true facts about what's going on in the credit world. So I'm going to shoot some questions at you, Ken. Is that good with you?
I'm ready.
Okay, I love it. So did you have anything you want to add about just your business and kind of any information about Scorewell in general?
Well, okay. So, like Tiffany mentioned, I own Scorewell Inc., and our primary focus is to educate people on credit. I think basically what I like to say is the credit bureaus and the credit world is a business, and they're motivated to offer you products that generate revenue for them. Um, I'd like to be a trusted source for my mortgage partners to give their clients the personalized service to have honest, factual information about credit, as well as to give them action plans to improve, which could be things that they could do or things that we could do.
I love it. And you just reminded me of another question I want to tack on there. So I might throw you a little curveball at the end, but I know you're ready for it, right?
I,
Okay, cool. So one of the first things, we kind of talked last week a little bit, and one of the questions that comes up most often is when I run their credit as a mortgage lender, and then I say they have a 700 score, but then they say, well, Credit Karma says, or one of these My FICO or Wells Fargo FICO, they'll say, oh, but mine says 739. So why are you saying 700? So why is Credit Karma usually come in lower from what I see? Or some of my clients, especially like I said, with the Wells Fargo FICO actually comes in higher. So why all the different variations?
well, yeah, that is a great question. And actually, that's probably the number one question I get asked. And first off, for a consumer to look at their credit scores, I commend them. I think that's fantastic. But it's important to realize that all of these platforms that we as consumers have access to, they're called consumer education type scores. They use a scoring model called Vantage. It's a good scoring model. Actually, it was created by the credit bureaus. And it's very good, but it's a little bit light-handed as far as looking at past damage. So typically, Credit Karma, credit card type scores, those will probably be maybe 30 points, maybe even higher than an official report pulled by a mortgage lender or a bank, because they use I'll use the word harsher, but more accurate, detailed formula that looks at the past 7 years and really focuses on any negatives.
And I did hear that a while back. I was kind of doing some research for a different video I was doing with Krista Mayshore, and I heard that if you have a repossession and you go to apply at a car dealership, your score is going to come in lower, even if you paid your mortgage on time. But because you had that repossession, because the ingredients they put in, that criteria they want is to make sure you pay your car on time. And with a mortgage lender, if you maybe paid your car on time, but you have a late payment, your score is going to be lower. Is that true, or is that
So true. Yeah, the different platforms are called scorecards, and when you go to purchase a vehicle, they use an auto lending, report or scorecard, and it does look at everything, but it really puts a lot of weight on current past autos. So if you've had successful auto transactions, you'll have a higher auto lending score. If you've had a negative or a repossession or a charge off, your auto lending score will definitely be lower.
Okay. All right, that's super helpful. And one of the questions I was going to ask you is, can you explain a charge off? Because I had a client a couple weeks ago that had a $15,000 charge off. It was unfortunately an ex-girlfriend, and he had signed for her at the time when they were together, co-signed, and the car got repossessed. There was a $15,000 charge off. And he said, "Oh, well, I don't owe that anymore. And that wasn't my car. That was my ex-girlfriend's." And so I explained to him that yes, you do still owe it in my lamest terms. He ended up calling, getting it for $1,700. He got it completely removed. They were going to give him monthly payments that would have totaled, like, after 6 months or 8 months, I think like three something thousand, but he just paid it off in a day. So we're kind of letting his credit heal. But can you explain a charge off? Because people a lot of the time say, well, I don't owe it anymore. So what does that
Right.
mean?
So, yeah, so the sequence of events on a credit report is that you have a trade line. In this case, it's an auto loan. If you are joint, it is yours as well. So, whatever happens with that loan, you are 100% responsible. Now, if you stop making payments, there could be a time, well, they'll start posting lates 30, 60, 90. But typically after 90 days, the auto financier may mark that as charged off or collection or something of that nature. Now, that doesn't mean that you don't owe them money. They're doing that for an internal purpose, maybe to write it off their books for tax reasons. But the Fair Credit, Fair Debt Collections Act says that you owe that debt, and it's considered a recourse debt for 4 years. That means if you defaulted and they charged it off in 2020, the creditor has until 2024 to sue you. They may or may not. But the other statute is 7 years, which means the credit bureaus will allow that to be on the report for 7 years. So, yeah, it is your debt, and it is enforceable up to 4 years, and it is reportable up to 7 years.
So once they charge it off, because this was a pretty old charge off, so would they still have to pay that money? Because you said, I think you said it falls off the credit report. Does that mean that it disappears and it's gone? Because I've seen charge offs from years ago.
Yeah, well, a charge off will stay on the report for 7 years from the first delinquency. So if they were late on January of 2022, then that would come off the report in January or February of 2029.
Okay. And some people say, well, I'll just wait because I refuse to pay it. And sometimes it's not 15,000, it's like 3,000. But the
Yeah.
pain you're causing yourself and having to even just get rid of it, try to make payments on it, if they're desperate enough, they've already charged it off. Would you agree that they're willing to just take small payments or whatever it does to just get rid of it?
Well, again, that's a great question. I would not advise making payments. Because once you make a payment, even if it's $1, it restarts that statute of limitations and makes it a fresh debt.
Ooh.
Um, Also, if you pay it, say it's a $3,000 and you negotiate to pay 2,000 or 1,000, that may be okay, but you have to understand that paying it will also re-age it. And even though it might show paid, settled, zero balance, it will still show that negative karma for 7 years from that paid date. So the best way is, if I think in what you said with this other client, is they paid it and they were going to delete it off the report. That's called I will pay you if you agree to delete it. That is pristine. That is perfect.
Yes, and we got a letter saying is being removed and deleted, like it almost like it didn't happen. So sometimes they'll settle for less than the full amount, but then the letter says that, but at least it says paid in full. I mean, it's step in the right direction. But yes, the deletion is a really great word we like to see, right?
Exactly. That's golden.
Oh, I love that. Okay, so thank you for your clarification on that. I'm sure I'm going to get a lot of feedbacks and side messages about that because that's a big one. So
Yeah.
another big one is what are so tell me about the new rules impacting paid and non-paid medical collections. I have clients that, aside from their Macy's and their Target card that they forgot that they applied for because they got 20% off and forgot to look at the bill. They're not used to having that, didn't set up online bill pay. That's a big one, but I see so many medical collections on my client's credit report, $12, 20 little copay, or I guess it wouldn't be a copay if it's on there as a collection, but it's small amounts equal to what would be a copay. So
Yeah.
I'm curious to hear what you have to say about all that.
Yeah, that was pretty breaking news, I guess, to beginning of the year. So there's two phases of how the credit bureaus are handling medical collections. And this has been a real big problem because 70% of credit reports have medical collections.
Oh, no wonder. I see them all the
Yeah.
time.
Yeah, and
Okay.
the government actually got involved through the Consumer Financial Protection Bureau. And the way, to sum it up, the way that the law is enacted and what is happening is starting this year, 2022, actually July, which was last month, any paid medical collection with a zero balance will be deleted off the report. So that's pretty important because even paid medical collections will impact the score. So that's really, really positive, and that's already happening right now. Sometimes it gets a little glitch, and we can help with that. But as of July 2022, paid medical collections will be deleted off the report. The better news is that starting in 2023 and by July of 2023, and this is huge, any medical collection under $500 will also be deleted. So, um, yeah, really, really great news for,
Wow, that is under 500. That's most of my
yeah,
derogatory. It is under $500. Like I said, it's really small amounts. So those are supposed to be deleted.
yeah, removed from the report. Also, it originally started, years ago. You'd go to the doctor and they'd bill their insurance, or there was a mix up, and 60 days later, you'd find a collection. I don't know, about 3 years ago, they said, okay, now a medical place cannot send a medical collection to the credit bureaus until it's been 6 months old. But now, with this thing that we're talking about right now that's happening, a medical collection cannot appear until it's aged out for 1 year. So there's a three-part deal. Paid medical collections should be gone now. Medical collections under 500 should be removed by the middle of next year. And collections that would come on the report cannot come on for up to a year now.
Oh, that's so good to know. I mean, this is something that's going to come up. I
Yeah,
run
it's
tons
big.
of credit, every month and even every week for my clients. So, which kind of brings me, thank you for that really, really good information that I didn't know about that. And I'm kind of in this credit, lending industry, and I didn't know about that. So thank you. So that kind of brings me to my next question is I have clients that are so freaked out about an inquiry.
Yeah.
So what is the impact of an inquiry on credit?
So you're hitting me with all the great questions. I love it.
Okay.
So yeah, inquiries are kind of important, and there's so much different analysis of how they impact the scores. And it kind of really starts relating to how high your score is. I mean, if you have a 500 credit score, then an inquiry is going to impact you a certain way. If you have a 700, it's going to impact you a different way. But basically, in general terms, an inquiry will hit your credit report and it will be anywhere from a 5 to a 10-point loss for about 90 days. The inquiry typically stays on the report for 2 years and then the credit bureaus remove it. If you apply for a credit card, that hit to your score is going to happen right away. If you apply for a mortgage, then that inquiry is really not going to hit your report for 45 days.
And will that, I got to stop you right there
Yeah,
because that obviously that's what I do is we pull the credit as a mortgage inquiry. So I hear it's 1 or 2 points or 5 points at the most. So you're saying 5 to 10?
yeah, I always say 5 to 10 because there's a lot of variables, but yeah, I would say that you are accurate. It's probably around 5. I would go with that. I feel comfortable with that.
Okay. And I think there's, like you said, there is a lot of variables because if somebody has a 800 credit score and this is their only inquiry they've had in, the last year or something, then it, oh well, and maybe I don't even see it going because we have to run credit sometimes multiple times, or if they're shopping from place to place, and it's not bringing down the score from what I've seen 5, 10, 20 points
Yeah,
over time,
no,
So,
no,
but if
yeah,
they have a 680 score or if they have a 650 score and they've applied for a bunch of credit cards because they're hurting, and then they go apply for a mortgage loan, it's gonna all those variables kind of come together, right?
exactly. Yeah. And two, it's not, I don't usually talk about it, but on a mortgage inquiry, the hit is not instantaneous because the credit bureaus know that you're trying to get a house. So they don't want you to have a mortgage broker pull a report and you're dinged and lose out. So the mortgage is the only inquiry that really doesn't impact your score for the first 45 days.
Okay.
So, and that's kind of important, but most people don't think about that. But, if you pulled it on August 1st, if you were going to lose 5 points, it wouldn't be until September 15th.
Okay. Okay, that's really good to know. And late payments, so those affect you for a year, if it is a credit card versus a mortgage inquiry. Tell me about that.
Late payments are the single most damaging. If you had a 700 credit score and you were late on a vehicle or a house or a credit card, you'll lose a minimum of 80 points. That's going to stay on your report for 7 years. And for the first 3 years, it's going to kind of really hurt you. And then it starts, declining as you put more positive history behind it.
Okay. And that's good. That's good to know also. And it's funny because I'm going to segue into like how people can actually, when they know to reach out to you and how you can serve them, because I know you do a lot of great things with the clients that I've sent to you. But I hear all the time, like, Tiff, I'm trying to fix my credit. What do I need to do? And I look and there's a bunch of late payments. I'm like, just pay your bills on time and
Yeah.
then call me in 6 months to a year. I mean, there's
Yeah.
no reinventing of the wheel that you need to do. A late payment is a late payment. So going into how you can help if there's no way for them to pay those on time, or they have too many credit cards and they can't do it, or they don't understand the snowball or the waterfall effect, some of those chipping away at the smaller cards first instead of paying equal amounts of minimum dues spread out over the credit cards. When do they know to go to you? Do they say like, I can't make these minimum dues, I need Ken? So tell me how people can use your services.
So, again, I want to be an extension to you as a top-notch loan officer. And when someone comes to you, they're trusting that you're going to give them good advice. And if they need help with credit, even if it's understanding their credit,
Yeah.
typically anyone you come in contact with, it's a great handoff to have them come to me. Now, what sets us apart from other companies, even though we are revenue based, and that is important, but we're more people based. And we offer a no charge, no pressure consultation to review their credit report, answer their questions, give them an action plan. Yes, do this, do that, and basically help them feel comfortable to move forward to improve their credit. So at any time, because most of us really, really don't understand credit. I mean, we Google a lot of stuff. We have friends and family give us advice, and maybe it's good advice, but um, to be handed over to someone like my team, myself, to have a very structured, positive, non-threatening phone call, you can get a lot of information.
Okay, I love that, and I'm gonna make sure I attach, in this link and more information about when people know to reach out to you and how. And I know that you're such a trusted, like I said, trusted friend and person in this industry, and it's just so great to see. So I appreciate everything. I appreciate you being with us today, and everybody, all this information will be right here. And thank you so much.
Thank you so much. It's been a pleasure, and I really appreciate and welcome the opportunity.
Uh,
Thanks.
Thanks, Ken. Thanks, everybody.
Bye.